Hello, everyone, and welcome to our latest webinar. In this edition of our Sevens Report webinars, we're going to be talking about what the election means for the markets. That's obviously a topic that's on seemingly everybody's mind right now, with just about 6 weeks to go until we have the election. It's obviously all over the media, and it's influencing markets as well. We haven't seen a ton of really good research that explains in a very simple way what each outcome for the markets means, what each outcome for the elections means for markets. So we decided that we were going to do one so that everybody can have just a basic roadmap of what to expect depending on who wins here in November. So with that, we're going to begin. Specifically, we have really two goals for today, for our session today. We want everyone to be able to quickly and confidently answer two questions if they're asked of them by a client or a colleague or a boss, and they are: who wins and who loses from the election, and what does the election mean for markets? Two very simple questions, but questions that certainly every financial advisor should have an answer to, and that any analyst should have an answer to as well. And individual investors as well, because what happens in November will move markets. So in the next few minutes, we're going to cover what are the current market expectations for the election, what are wild cards to watch. That's sort of our in-house term for what can come out of left field and surprise markets, and then what assets or sectors will be winners or losers depending on the election, because there will be definitive winners and losers depending on who is the victor there in early November. First, market expectations. The market expects Clinton to win, and there's several reasons for that. Number one, the polls imply it. But beyond the polls, and we're sort of ignoring the polls in this slide because they obviously can change, but from a structural standpoint, the Electoral College favors her. At the end of the day, the presidential election is not a general national election. It's the sum of 50 individual elections, and the Electoral College favors her, just based on the way it looks right now. Second, third-party polls can skew pre-election polling, making the race appear tighter than it really is. And part of the reason for that is because third-party candidates their supporters don't always actually come out and vote. So they say, when you get a phone call, yeah, I'm for Gary Johnson, or I'm for the Green Party candidate, but I'm actually going to go out on Tuesday, election day, and vote for them. Studies have shown that their turnout is lower than it would appear based on polling. We're not election analysts here, but we do pay attention to this stuff, and it seems like Pennsylvania is a pretty important state to watch. It's a state that Trump must win if he is going to become president. And if that starts to tighten and turn his way, that could be a leading indicator that perhaps the election will be tighter than what current expectation is. We're not seeing that so far, but Pennsylvania is something we are watching to see if all of a sudden things get a bit closer into election day. So market winners, regardless of who wins, as we begin to talk about winners and losers out of this election, these are sectors that are going to probably outperform regardless of whether it's Trump or Clinton. And there are three of them: infrastructure stocks, defense stocks, and gold. And the reasons are generally obvious. Infrastructure stocks, both candidates have spent a lot of time on the stump talking about the need to spend on infrastructure. All signs are pointing to an expansion of fiscal spending in 2016, regardless of who is president. So infrastructure stocks should see revenue from government contracts begin to rise in 2017. And that's something that will benefit that sector regardless of who wins. Defense stocks, both candidates have talked about boosting defense spending as well. Who does it more, we don't know. But they both are looking at increasing defense spending, and that's something that should help the defense stocks, especially with ongoing efforts against ISIS and other potential conflicts looming. And then finally, gold. Regardless of who wins, there is bound to be some sort of uncertainty and unease among the populace, and beyond the very short term among the markets. That doesn't mean that either candidate is necessarily bullish or bearish. It's just that the country is not in love with either candidate, and certainly both of them bring various types of baggage along with them. That will manifest itself in some sort of uncertainty or volatility at some point for the markets. And gold will likely be the beneficiary of that over the short and medium term. So if somebody asks you, who's a definitive winner regardless of who wins the elections, the answer is infrastructure stocks, defense stocks, and gold. Also, please note I did not say gold stocks. They're a different animal. We're talking about gold specifically. Looking at each possible outcome, if Clinton wins, this is the market preference. And I don't say that with any sort of a political view. I only say it because the market always craves what it knows. The market wants familiarity, and Clinton is a familiar commodity. We can generally guess how she's going to act as president from a policy standpoint. And that's comforting to markets. And I use this obviously just as it's an old saying, but the devil you know is better than the devil you don't. And that's the way the market looks at it. From a market reaction standpoint, if she wins in early November, we'll probably see a mild relief rally. In the short term, I do not expect that to be a significantly bullish event for a multitude of reasons. But we probably will see a couple-day mild relief rally if Clinton wins in early November. From a sector standpoint, there are definite winners and losers from a Hillary Clinton presidency. Winners are hospital stocks, gun manufacturers, which may seem counterintuitive, but I'll explain in a second, and alternative energy names. Now, the hospital stocks are winners because a Clinton presidency means no direct repeal and replacement of Obamacare. There will be changes made at the margin, but no significant overhaul. So that will remove potential risks from the hospital stocks, which are the biggest beneficiaries of Obamacare. Gun manufacturers will benefit for sort of an odd reason. Gun enthusiasts will assume a Clinton presidency will result in some sort of an assault, pardon the pun, on the Second Amendment. Whether that's true or not, we can debate, but the fact of the matter is people will think it's true, and that will drive their behavior. So you will see the day after a Clinton presidency, people going out and buying guns for fear that later on, years from now or whenever, they will not have the ability to do so, or at least buy specific types of guns. So gun manufacturers will rally very similarly to how they rally after terrorist events. And finally, alternative energy stocks. Obviously, with Clinton more favors alternative energy compared to traditional fossil fuels. So we can expect the government funding pipeline to stay open for alternative energy names if Clinton wins. So those are three pretty safe winners out of sector winners out of a Clinton victory. Losers, biotech and pharma. Clinton has made a big deal talking about, the whole EpiPen Mylan Labs saga from a couple months ago. And there is definite motion on some sort of price caps or some sort of punitive efforts on drug companies, biotech companies that have very high drug prices. So if Clinton wins, you will see the biotech and pharma sector get hit. Energy and coal stocks, that's obvious. I just got done saying that Clinton obviously prefers alternative energy as opposed to the traditional fossil fuel energy generation. And we all know by this point, if you've been watching any TV, she talks about putting the coal miners out of business. Obvious as far as what her stance is there. So that's not particularly good for coal stocks or energy stocks. And then finally, private prison stocks. There aren't a lot of these, but there are a couple, and she made comments in the first debate that she's very happy, I believe, that they no longer have federal contracts, and that she wants to see them no longer have state contracts as well. Well, that's basically putting them completely out of business if she can achieve that. So obviously that's not good for private prison stocks. So there would be definitive losers if she wins. Looking at Trump, from a broad market reaction, there would be a near-term sell-off in stocks because he's an unknown quantity. Again, I'm not making a comment on whether or not I think he'd be good for the markets longer term. I'm just telling you what will happen in the short term, because the market doesn't know how Trump is going to react or behave from a policy standpoint as president. So when markets get presented with that sort of an issue, it's sell first, ask questions later. Again, that's a short-term reaction. I'm not saying that Donald Trump winning the presidency is going to create a bear market. I don't know that. But I do know that in the short term, markets will take a dip on Trump's presidency. Now, he could end up becoming a fantastic president that ushers in an economic boom, but that's a medium and longer term issue. And what I'm talking about here is the immediate market reaction, and that will be negative if Trump wins. From a sector standpoint, it's sort of the inverse of Clinton, only with a couple twists. Coal and energy stocks obviously will see a huge bounce if Trump wins, because obviously we're going to see probably a rollback of some of the regulations that have really hurt those industries, and an increased exploration, most likely from traditional energy stocks, natural gas and oil stocks. Pharma and biotech will see a relief rally because Trump has not expressed any desire to really go after any of these companies for their pricing. And then finally, banks will get a boost. Banks will get a boost for a multitude of reasons. Number one, the pressure will grow on the Federal Reserve to increase interest rates. He's been pretty vocal about that. Secondarily, you can expect to see Dodd-Frank, which is the law that really has heaped regulation on the banks, that will start to get picked apart. So banks, which have already been trading well over the past several weeks, will get an added boost from a Trump victory. Firstly, looking at losers, hospitals, and probably the whole healthcare industry in general, because you're going to see them go after Obamacare in a big way. Now, whether or not they're successful, that's a question for a later time. But post-election, the entire healthcare sector will likely get hit, with hospitals leading the way down because, again, they are the biggest beneficiaries of the Obamacare legislation. And then also alternative energy, because you're going to see a reduction in the government funding of those projects that require government help, frankly, to make economic sense. So those would be two definitive losers if Trump wins. So that's basically the roadmap for the election as we stand about a little over 6 weeks into the election. It's not a lot from a market standpoint is going to change between now and then. And what I mean by that is that these are going to be the winners and losers. There could be some changes to the periphery, but if someone asks you who wins and who loses from the election, these are the sectors that will benefit or get hurt depending on who wins. We hope this has given you the talking points and the information you need to feel confident about what's going on with the election and how it's going to affect markets. If you would like more of this type of research, you can sign up for a free 2-week trial of the Sevens Report. The Sevens Report is a daily macroeconomic report that is sent out every trading day at 7 a.m. You can read it in under 7 minutes, so it doesn't take a long time for you to figure out what's going on that day across the global economy and across asset classes. We cover stocks, bonds, commodities, currencies, and economic data. Thousands of financial advisors, financial professionals, and sophisticated individual investors subscribe and read us every day. So we invite you to take that free 2-week trial. It is 0 risk and 0 cost when you sign up for it. Literally all that happens is you get added to the customer rolls for 2 weeks. If at the end of that 2-week period you have not purchased a subscription, you simply get removed. So that's all the free trial is. And again, go to Sevens Report, SEVENS report.com, and just put in your email address and we'll get you started on the trial. Thank you very much for listening and have a good day.